So many investors I work with think you have to be sitting on a mountain of cash in order to purchase an investment property. Even on a $300,000 purchase with a 20-25% down payment typically for a DSCR loan, you're looking at roughly $60,000 to $75,000 in cash. Most investors don't have that liquid, but there's a few ways you can actually come up with that down payment that might be much easier than you think. In this video, we're gonna cover the 5 ways you can come up with the cash for a down payment. The most common approach to come up with the down payment would be using your personal liquid funds, like your checking account, savings account, or even using your brokerage account. With the stock market being up over the past few years, this is easily the most common approach investors I have worked with have used to come up with the down payment. Lenders gonna ask for 2 months worth of bank statements. They will consider and they will take a look at any other large deposits going into your account. If there's a large deposit, a significant amount of money that gets deposited at once, the lender could require you to back out these funds. This is when the lender doesn't accept that large deposit and they exclude that from the actual balance if they can't deem and reasonably explain where that money came from. To me, the most underrated way that I've seen investors come up with the down payment is taking out a HELOC. You can take out a HELOC against an investment property or against a primary residence that you already own. We actually just rolled out a new program and I've had tons of investors take advantage of this program recently. It's a 90% CLTV HELOC. So quick example, let's say your property is worth $1 million for example's sake, and you currently owe $700,000 on that property. This HELOC will allow you to go up to 90% of that property's value. So as you can see here, about $200,000 you'd be able to tap into to cover your down payment for the next purchase. These programs have become increasingly more efficient and easier to close on. Nowadays, these HELOC programs are AI powered. You can close in under a week. There's typically no appraisal and it's only a soft credit check to start. So HELOCs have been an extremely popular way I've seen a ton of investors use to come up with the down payment in recent years. Similar to a HELOC, you can do a cash out refinance on, again, either a primary residence or another rental property. Typically, the max loan to value you can tap into is 75% and occasionally 80% of that property's value. So you're not going to get quite as aggressive as that 90% CLTV HELOC, but you can still tap into 75 or 80%. Typically, a cash out refinance would make more sense if you're in a higher interest rate as opposed to a COVID level 3% rate. That's when the HELOC can make more sense because you're not going to be paying off that low interest rate. So whether the cash out refinance makes more sense or a HELOC is going to depend on what the interest rate is you have on your current property, how fast you're looking to get the money, because HELOCs can be a little bit quicker, and overall how much cash you're looking to take. Gift funds have become really popular also in the past couple of years. More and more lenders have really eased up on their guidelines, their underwriting criteria, and now accepting gift funds. Gift funds is essentially money from an outside source, a friend or a family member that's going to be contributing towards the down payment. So in previous years, at least today, if you decide to purchase an investment property with a conventional loan, no lender in the country would ever let you use gift funds. So because DSCR loans have become a popular alternative to conventional, lenders are now being more reasonable with those guidelines as opposed to the more stringent conventional and allowing you to use gift funds when needed to come up with a down payment. So you'd still have to have a gift letter signed from the donor. The money does not always have to be verified. It's actually easier to send that money directly to title, so you never have to have that donor send in their bank statement. A common approach to alleviate even less documentation without having to do the gift letter, some lenders do not even look at the funds in terms of large deposits. So the lender is not going to source a large deposit. You can actually just send the gift to the borrower itself, to yourself, the investor. And as long as that lender is not going to check any large deposits, then therefore you've already had the gift funds documented in that account. There's not going to be any other questions asked. Some lenders are really strict about large deposits and some don't even care at all. So make sure you ask your lender up front, are you going to source large deposits? Can I have a gift fund deposit come into my account before closing? Last but definitely not least is tapping into your retirement for the down payment. This could be an IRA, this can be a 401k. I've had tons of clients over the years take out loans against their 401k to come up with a down payment. Again, This is an option that pretty much every lender in the country would accept for a DSCR loan and even a conventional loan. You can take out the lesser of either 50% of the vested balance or $50,000. You can also do a liquidation against your retirement account too, but there's not going to be as stringent of rules. However, there's going to be different tax implications if you do a liquidation versus taking out a loan. Both options are quick ways to come up with cash if you have a significant amount of money into retirement, or if you only need a little bit more to put you over that edge to meet the lender's down payment requirement. This can be an extremely popular method to come up with the down payment. If you're looking to purchase before you go ahead and take out the 401k loan or deposit that cash into your account, I highly recommend you double check the lender that you're working with and ask them, do you guys source large deposits? Do you source within the past 60 days of funds on the bank account, or do you not even go back that far at all? Every lender, especially for DSCR financing, where the underwriting guidelines is not going to be uniform, they have their own set of criteria, and that's why it's important to ask your lender, your loan officer, or your broker how this is going to be underwritten, and make sure you can avoid any red flags that are going to give you additional hurdles in underwriting. Any questions at all for me? Of course, my name is Austin Clarence. Please drop me a comment, shoot me a message. Look forward to getting in touch.